What's up, investors? Welcome back to Trades and Gains. Are you ready to talk about Meta platforms? That's right, the artist formerly known as Facebook. Their Q4 earnings call is on January 29th, and it is shaping up to be a critical moment for the company and for you if you're holding or eyeing the stock. Is Meta still the golden goose of tech, or is it venturing too far into the metaverse rabbit hole? Let's break it all down into today's video. Now, analysts are expecting 24% year over year revenue growth, which sounds phenomenal, but let's get real. This growth isn't just Meta pulling magic out of a hat. It's largely due to their AI-driven ad targeting systems, which have become even smarter. Sourced from the Wall Street Journal. Remember all the panic about Apple's privacy changes crushing Meta's ad revenue? It turns out they've adapted like champs, leaning into AI to help advertisers target effectively without invading user privacy. But here's the catch. That growth comes with a hefty price tag. Meta is pouring billions into Reality Labs division, which we'll talk about next. Speaking of Reality Labs, this is Meta's big bet on the future. Their playground for metaverse dreams and AR/VR tech. This is the brainchild and the brain behind their Quest VR headsets and their smart glasses initiative. Sounds futuristic, right? It is, but it's also bleeding cash. Reality Labs posted a $3.7 billion loss last quarter. Now, why should you care? Because these investments are either going to make Meta the next trillion-dollar company or drag down its margins for years to come. Imagine they crack the code on AR smart glasses, game over for the competition. But if they don't, investors are stuck holding the bill for Zuckerberg's passion project. Now let's talk about the stock price. Meta is currently trading around $632.73 at the time of this recording, and that's a significant recovery from its 2022 lows, when the market punished them for the metaverse pivot. But is it still a good deal? Let's crunch the numbers. Meta's projected 14.3% compound annual growth rate through 2030 is solid, but not earth-shattering. Combine that with a relatively slim 11% margin of safety, and we're looking at a stock that might be fairly valued right now. Not screaming bargain if you're buying in at this level. You're betting on those big future projects delivering massive returns. Now let's zoom out. Meta's stock has outperformed many of its peers, but the competition isn't exactly sitting idle. TikTok continues to dominate younger demographics, eating into Meta's ad market share. Meanwhile, YouTube is crushing it with its short-form video strategy, and LinkedIn is carving out a niche for professionals. Meta's growth depends on staying innovative, especially as their core apps, Facebook, Instagram, and WhatsApp, reach saturation in developed markets. Can they grow outside their comfort zone, or are we hitting a plateau? That's the trillion-dollar question. Now, why does this all matter to you? Meta's Q4 earnings aren't just another line on a spreadsheet. They're a litmus test for their strategy. If the company continues to demonstrate resilience in ad revenue and shows real progress in AR/VR, investors will reward that vision. If not, well, let's just say Wall Street doesn't tolerate expensive experiments for too long. So what's the call here? Meta's got the growth, the vision, and the cash flow to keep its empire expanding. But at what cost? If you're holding Meta, you're buying into that long-term dream. If you're waiting on the sidelines, Q4's numbers could give you the clarity you need to jump in or stay out. Don't forget to like, subscribe, and hit the bell for more no bullshit market insights. And drop your hot take in the comments, bullish or bearish on Meta. Let's go ahead and hear it, folks.